Hello everyone, my name is Adeji Alfred from the Broke Lagosian, and you're welcome to my channel, a channel where we talk about money, investing, and the habits that surround our personal finances. Today I'm going to be talking to you about what a mutual fund is and how you can make money by investing in them. As a reminder, please do not forget to like and subscribe to my channel for exciting content in the future. A mutual fund is an investment vehicle that comprises of a pool of money from different individuals and institutional investors from all walks of life for the sole purpose of investing in an agreed portfolio and in an agreed manner. The people who are licensed to carry out the activities of operating a mutual fund are often financial institutions. There are basically two types of mutual funds. We have an actively managed mutual fund and a passively managed mutual fund. An actively managed mutual fund employs hundreds and thousands of specialists and financial analysts who analyze different types of investments, all with the aim of trying to generate a return that is higher than what the market can offer you. On the other hand, you have a passively managed mutual fund that invests in securities and all these financial instruments, but they are really not doing a lot of researching in order to be able to beat the market. But they believe that if they choose the right stocks at the beginning, then if you invest for a long period of time, you might be able to generate enough returns that will just be sufficient for you. The difference between these mutual funds is that oftentimes an actively managed mutual fund, because it employs a lot of financial gurus, would have what we call a management fee that is much more expensive than that is charged by passively managed mutual funds. And the implication of having a higher management fee charged is that the returns that you may enjoy from your mutual funds, in the case of an actively managed mutual fund, may be much more lower than what you'd enjoy if you are investing in a passively managed mutual fund, because of the management fee would then reduce whatever dividend that is being generated by you. There are many types of mutual funds. So you could have mutual funds that invest in treasury bills, which we call the money market mutual funds. With the money market mutual funds, you find out that the risk and rewards that you generate are minimum. In essence, a mutual fund that invests in the money market invests in government securities, it invests in government bonds and government loans and all of those kind of things. It means that when you invest in a money market mutual fund, your capital is being preserved. It also means that the returns you generate would also mimic the returns that you would ordinarily generate if you're investing in a treasury bills by yourself, except of course that the mutual fund organization is then going to be charging you a management fee for the services that you're going to get or that you're getting. On the other hand, other mutual funds invest in the stock market. So you have mutual funds that invest in the top 100 stock market, that's the top performing 100 shares in the stock market, maybe in the top 50 performing stocks in the stock market. Now, the only way you can make money when investing in the mutual fund that invests in the stock market is by investing in the long run, investing for the long run. Now, that's because when you invest in a mutual fund that invests in the stock market, you would often find out that the price at which you buy would often be higher than the price at which you can sell immediately. So there's something called a bid price, and then there's something called an ask price. You cannot expect your capital to be preserved because the gains you're going to get from the mutual fund is going to be comprised of two. That's the dividend that you get at the end of every year and any capital appreciation that happens to the shares on the stock market. So it's either that can go up or that can go down. So you can either get a capital appreciation or a loss of capital. There are also other mutual funds that invest in ethical shares or ethical securities. So for example, you might have mutual funds that invest in Muslim traded bonds or Islamic bonds, and the underlying tenets are those that are guided by Islamic financing and Islamic banking, where interest is not allowed. So for example, a mutual fund could invest in an Islamic business and do a profit sharing for you, the shareholders, at the end of every year. Another mutual fund could maybe decide not to invest in ethical things and just decide to invest in just tobacco businesses or even just agri-businesses. So mutual funds can also be specialized in terms of the investment that they make. And as a byproduct of all of this, you also have mutual funds that invest in foreign currencies, whether in US dollars, and you can get your returns in US dollars as well. Stanbic IBTC in Nigeria, for example, has one of such mutual funds. Whatever your objective for investing in mutual fund is, whatever your financial goals for investing in mutual fund is, many mutual funds can give you that. So some mutual funds will give you a dividend on a quarterly basis, while others will give you a dividend on an annual basis. So you need to consider what your goals are, whether you would prefer to receive a quarterly dividend, or whether you would, even when the dividends are being declared, prefer to reinvest your dividend back into the mutual funds automatically so that you can get the benefits of compound interest. To summarize all of this, mutual funds are one of the very liquid forms of investment you can get in the country. Banks such as Investment One can give you back your money in the space of a day or two. Mostly in a 2-day period, you can get back whatever you've invested when you ever need the money. So these mutual funds are very, very liquid forms of investment, and they can also form a way for you to get a passive income source or create a passive income source for yourself on a quarterly basis or on an annual basis if you choose to invest in them. So let me know what you think about a mutual fund is. I'll leave a link in the description to some of the mutual funds that you can open if you ever choose to start investing in mutual funds. Please do not forget to like and subscribe to my channel, and I'll see you guys in the next video. Bye.